Inventory is up 23% year over year, pendings just jumped 23% month over month, and prices are essentially flat, which tells us one thing. This market isn't crashing, it's stabilizing. And stabilization changes how you play the game. So let's break down what exactly is happening. I just got the latest BRR news report with January market stats. So instead of just reading them, let's interpret them. For median sales price, we're sitting at about $535,999 overall. So that's up 2.1% month over month and down 0.6% year over year. Resale homes came in at $512,500 and new construction $560,000. So what does this mean? It means pricing is flat year over year, not declining, not surging, just flat. And in a market that went through extreme volatility over the past few years, flat's actually stable. But here's something nuanced. Meridian sales made up 31% of closings this month, down 36% in December. Meridian tends to run 50 to 75K lower than the county median. When fewer of those homes close, the median shifts. This is why you cannot read price data without understanding the full picture. So let's talk about homes sold. We had 531 homes close in January. That's up 6.8% year over year, but down 23.2% month over month. That month over month drop, completely seasonal. January is not historically known for its party atmosphere, but year over year being up tells us demand hasn't evaporated. The biggest decline was resale homes built 11 to 30 years ago. Meridian saw the sharpest drop in sales, largely from fewer new build closings. So the numbers shifted because different types of homes sold, not because the market suddenly changed. For pending sales, and this is a forward indicator, this is where I pay attention. We had 1,108 homes go pending. That's up 23% month over month and up 1.4% year over year. Now that's not a chill number. That's people quietly writing contracts while headlines argue about inflation. Nearly half of those pending sales are scheduled to close next month. That means February activity is already in motion. Also, what's interesting, 60% of all inventory is new construction, 80% of older pendings are new homes. So builders are and have been a major force in the market right now. Okay, let's talk about inventory. We currently have 1,567 homes on the market. That's up 23.3% year over year and down 1.8% month over month. So yes, inventory is up compared to last year, but month supply sits at 2.1 months. A balanced market is 4 to 6 months. So are we drowning in homes? No, we're about ankle deep, which is a very different headline than inventory is rising. For days on market, average days are 55 days. Resale is going to be 46 days, new construction is 69. So homes are taking longer than peak frenzy years, but they are still moving. This is what normalization looks like. Now, I will preface, it's really important as I talk about just the overall Treasure Valley stats, it really depends what sub-market you are in. So for example, I'm doing a lot of work in North End and East End right now. A lot of buyers, not a lot of inventory. So homes are often only sitting a few days. So that's quite a different number than what you're seeing on these longer day stats. So typically what I'm telling people right now is that if you think you love it, don't even wait to that open house weekend. Go and get a private showing. Make sure you're ready with that pre-approval, that you're ready to make an offer right away. And if you're in no rush and you're not that picky about the home or the location, see if you can let it sit for over 55 days and maybe you can get a better deal. All right, we're gonna go national context. Let's zoom out a little bit. A new Urban Institute study showed that the typical American household earns nearly $20K more in inflation-adjusted income than in 1970. But growth varies state by state. The strongest income growth occurred in western and coastal states. In Idaho, up 48% since 1970. And that matters because Idaho continues to be a high-growth income state, which supports long-term demand fundamentals, especially as relocation continues. Let's talk about inflation and rates. So inflation cooled more than expected in January. The CPI is 2.4%, core inflation 2.5%, Fed funds rate 3.5 to 3.75%, 90% probability the Feds hold steady in March. Translation, the Fed is in a let's not touch anything mode. Rates are likely stable in the near future. Stability reduces fear-driven decision-making, which supports housing activity. Okay, so now let's look at local development signals. Because housing doesn't exist in isolation, it responds to infrastructure, retail confidence, employee strength, and city investment. And when you start layering these signals together, you get a clearer picture of where we're headed. First up, the Village at Meridian expansion. The Village is adding 100,000 square feet of retail and restaurant space. But here's the part that matters, nearly all of it already spoken for. That means before construction is even complete, tenants like Aloe Yoga, Kendra Scott, Flower Child, they've already committed. And That's not speculative. That's brands running their analytics, studying demographics, and deciding this market supports growth. Retailers expand when spending power exists. That aligns directly with Idaho's long-term income growth story. Costco has submitted an official application to build in Eagle. I know you're all excited. Now, Costco doesn't guess. They evaluate rooftop, traffic counts, household income, long-term growth corridors. And when you see major anchors like Costco move into a submarket, it usually signals long-term confidence is in residential expansion nearby. So the city of Boise received a federal grant to study and improve a high crash corridor along Fairview. This may sound unrelated to real estate. It's not. When cities receive federal infrastructure dollars, it signals prioritization and long-term planning. Infrastructure upgrades often precede stabilization and redevelopment, and corridor improvements affect accessibility, which directly impacts housing desirability. So Caldwell voters approved $17.3 million for new fire stations and administrative upgrades. Public safety investment is one of the clearest indicators of expected growth. Cities don't expand emergency services unless they anticipate increased density and development. This aligns with the broader westward growth trend we've been watching. There's a interfaith shelter opening. So Boise opened a new 200+ bed shelter with integrated services and permanent lockers for residents. This replaces a model that required people to leave during the day without storage. Stability and social infrastructure matters because downtown vitality, safety perception, and community integration all influence residential demand patterns. This is part of the long-term urban stabilization. And Blue Cross had some layoffs. So now on the employee side, Blue Cross of Idaho announced 89 layoffs during restructuring. Right now, we're seeing companies tighten up, not shut down, but it's worth watching. So what does all of this actually mean? So when we stack it together, inventory up 23% year over year, pendings up 23% month over month, prices flat, inflation cooling, rates are steady, retail expanding, and infrastructure investing. This doesn't look like a panic, it looks like normalization. And normalization is wonderful. This is the kind of market where buyers can negotiate intelligently instead of emotionally. Sellers need precise strategy instead of optimism, and relocation decisions benefit from the local insight, not the national headlines. Thankfully, the chaos years are behind us. If you're buying this year, your leverage depends on the property type, especially with builders controlling 60% of the inventory. If you're selling, pricing correctly out of the gate matters more than ever, and I'm even going to throw in there presentation is key. Overpricing in a 2.1 month supply market doesn't create competition, it creates stagnation. And if you're relocating, Idaho's long-term income growth and infrastructure investment still support the bigger picture, but timing and neighborhood selection do matter. This isn't a market for guesswork. Markets don't usually send fireworks when they shift, they send subtle cues. Right now, the signal is stable, strategic, moving, but thoughtfully. So if you're planning to move this year and want to understand how to position yourself in this specific phase of the Treasure Valley market, let's hop on a phone call. I'm going to put all my details below. I also have some incredible guides. I have a relocation guide. I have a scouting map with all of my favorite businesses. I also have a new construction guide that goes over the major subdivisions in town and gives you some insight on the builders, as well as some well-loved seller and buyer guides. So many resources I have not even mentioned, so feel free to check out what I have below and reach out with any questions. I'll see you next month.